This is Zillow on the daily chart, and they had earnings this past week. And after reporting revenue and EBITDA that exceeded Wall Street expectations, we had a pop in the stock. However, what happened next? You have a topping tail, an indecision candle or inside candle, and then you had a gap and go. Now, price has almost retraced the entire move, short-term move higher. So I would say earnings weren't that impressive according to Wall Street. Now, before we continue with analysis, starting with the monthly chart, we're going to look at the actual results. So Zillow saw its shares rise more than 3% following the closing bell on Tuesday after the company reported better than expected fiscal Q4 revenue. Specifically, revenue came in at $474 million, topping the consensus estimates of $451 million. Moreover, Zillow's adjusted EBITDA for the quarter was $69 million, significantly higher than the predicted $58 million. Zillow reported 2.2 billion visits to its platform during the period, aligning with analyst estimates. Here's what the CEO had to say on the quarter. We reported great revenue numbers across the whole of our increasingly diversified and growing business. Our progress is crafting an integrated customer experience in our early markets has given us the confidence to press on the accelerator and expand this experience to more markets in 2024. Now, interest rates have come down. They're still high relative to historical standards. And when you have high interest rates, well, you don't have a housing market boom, and that affects all ancillary business models such as Zillow. So this is the monthly chart again. You have this massive we'll call it resistance level at $65. Resistance back in June of 2018, then again in February 2020, and then again in March 2022. All right, so let's take it down to the weekly chart. As there are levels of interest, and we'll go right to the say the $48 level. Now, if I draw a trend line, this was a steep move higher, and what we have now is some basing. Now, one can say this is a potential bear flag setup. And typically, a bull flag setup. And so price could be just setting up for the next leg higher. And if that's the case, you're going to see that $65 level be taken out. Now, what I anticipate happening is if price is going to break out to the upside, look for the buyers and sellers to battle it out at the $65 level. However, if you look at your 13 and 26 weekly moving average, you have the bullish crossover, although the 26 weekly moving average is still flat and has not turned up yet. Hence the consolidation taking place now. All right, so let's go back down to the daily chart. We have price sitting right at the 50-day moving average. We have the 200-day and the 100-day moving average roughly at that $48 level, so roughly $6 below current price. So again, price dip further, definitely can. Potentially if price breaks out of this bull flag formation, consider this level resistance support band at $48 being a bull trap, meaning if price breaks down, you're going to have the resistance and support traders shorting stock only to be met with buyers at this level here, which coincides at the where the 200-day and the 100-day meet. So this would be potentially a good level to go long. Again, if this setup doesn't pan out, ultimately I have a target at 65 short term to medium term. Thanks for watching. Subscribe. Please like the video.